5 years ago, something fundamental has changed for Bitcoin, and that change might trigger an even bigger change 7 years from now. The cycles might get broken and Bitcoin's price will move in ways that nobody predicts. Let me show you what I mean. Have a look at this chart. This is the balance on exchanges for Bitcoin. So in the first years of Bitcoin's existence, more and more Bitcoin moved to the exchanges for active trading. So that's the line in blue. What we see in orange, by the way, is Bitcoin's long-term price. Now in 2020, a shift happened. It seems like more and more Bitcoin got moved into cold storage. It wasn't used that much anymore on the centralized exchanges, and since then that balance is coming down. Now the big question is, what will happen once the Bitcoin balance is close to zero? Once the centralized exchanges don't have any Bitcoin to sell you anymore, when everything is held by the long-term holders. Now you know me as a person that makes very sophisticated analyses, and so I've used one of the most sophisticated tools out there, Microsoft Paint. So just drawing the current trend, how Bitcoin is leaving the exchanges into the future to figure out at what point are we hitting zero if we keep the current pace. And the answer is the year 2032. 7 years from now, the centralized exchanges won't have any Bitcoin anymore to sell us because the long-term holders that store Bitcoin in their hardware wallets, that just want to hold it over the long term, they have scooped up all the Bitcoin. Now that then means that we've got less available liquidity, but that also means that in case there's more demand, the price will be way more reactive to that additional demand. Less liquidity means more reactiveness to demand changes. Now, despite the general trend of Bitcoin leaving the exchanges, we sometimes do see old supply that suddenly gets revived out of nothing. And that's the nice thing about the blockchain, right? We can have a look at the data that we don't have available, say for the stock market or for any other market for that matter. Here is the common indicator used for what's happening with the very old Bitcoin. It's the whale shadows. And what we see here in blue is how much Bitcoin gets reactivated after it hasn't moved for more than 10 years. So once Bitcoin hit the $70,000 mark, we saw way more selling. So not necessarily all Bitcoin that's inactive for 10 years stays inactive. Now in aggregate, it's definitely true that more Bitcoin gets lost than revived over time. So the percent of Bitcoin that hasn't moved for 10 years, it tends to grow. It doesn't grow as quickly as it used to, but still in aggregate, Bitcoin becomes more rare over time. But that doesn't mean that there's no Bitcoin at all that gets revived after 10 years. Now here are the whale shadows for the wallets that have held Bitcoin between 7 and 9 years. And again, most of that gets sold when Bitcoin hits new all-time highs. So that was in 2021 when Bitcoin was close to 50K. It's also recently when Bitcoin hit 100K. But again, the cohort as a whole tends to grow over time as a fraction of all of Bitcoin supply. So currently roughly 25% of Bitcoin supply hasn't moved in the last 7+ years. And now we're getting to the more active traders. So this is now the Bitcoin that hasn't moved for the last 5 to 7 years. There was less activity in 2016, 2017 compared to the prior cycle. Again, more activity tends to happen when prices are high, less activity when prices are low. And here's the ownership over time. And we can already see how once we include the wallets between 5 to 7 years, how this in aggregate sometimes goes down. Not by much, but there are certain events where those holders sell. But the overall trend is of course healthy. So more and more of Bitcoin supply is held by long-term holders. And that's then in the end also what creates those higher highs and higher lows over time. And that's why the Bitcoin price continues to go up, because it becomes more and more rare. And Bitcoin is seen as the digital gold. And that's also where Bitcoin differentiates itself from all the other cryptocurrencies, right? We can just hold Bitcoin over 4, 5, 6 years. At some point, it likely recovers again. That's not necessarily true for the altcoin. And because of that, it's likely going to continue to be the case that Bitcoin will be the majority of crypto's market cap. even though it might not be the most efficient cryptocurrency, even though it's not the fastest to execute transactions, simply because of its nature of having been in existence for such a long time without changing tokenomics, without any conflict of interest, without insider selling, etc. Just because of that, it will stay a relevant asset class for the years to come. And then, of course, it will be interesting of how the price development will change leading into the 2030s. Again, if this trend continues, if the exchanges hold less and less Bitcoin, price sensitivity will shoot up. And then maybe this idea of diminishing returns of Bitcoin growing less quickly over time will be proven wrong. Now, in that process, we might also see more volatility temporarily to the downside, because if exchanges say that they hold Bitcoin, but indeed they don't have it, that can then lead to a situation where people try to withdraw it, they don't get the BTC, and that then creates another FTX-like scenario. And that, of course, rather first scares investors. If there's an implosion like FTX or like Terra Luna or like Three Arrows Capital, Celsius, etc., then that first accelerates a bear market. But the overall long-term trend is still intact. Overall, long-term, we see less and less Bitcoin becoming available. And so here's then the Bitcoin that hasn't moved for the last 4 to 5 years. There is less reactivity to the price cycles. It tends to just move from time to time. And once we even include the wallets that haven't moved it for the last 3 years, we can clearly see there is some reactivation every now and then, but only during those extreme cycles, right? When Bitcoin moved from $200 to $20,000, so a 100x, that's then when we saw subsequently that wallet cohort taking profit. But in general, again, we see how long-term holders take over more and more of the supply. Currently, maybe around 45% or so is held by the wallets that haven't moved their Bitcoin for the last 3 years. Again, Bitcoin is mainly a long-term investment now. It's not used for active speculation that much anymore. I think the profit taking over here is also less of a case of speculative movements, but mainly of portfolio rebalancing. Because let's say you start off with a Bitcoin allocation across your overall wealth of 10%, right? Let's say you've got also property and precious metals and stocks, and you also have some addition of crypto, of Bitcoin, of 10% in that portfolio. If then those 10% make a 5x and a 10x, and as in that one cycle 100x, then of course you want to reduce your exposure. You don't want to have the majority of your wealth in crypto because you started off with 10%. You probably don't want to have 90% then of all of your money in BTC. That's probably why people sell after such a massive run. And when Bitcoin doesn't rally that quickly and to that of a degree, we also don't see that wallet cohort taking profit. We rather tend to see long-term accumulation. Now, those kinds of considerations help us with the very long term. It makes sense to just hold Bitcoin in a long-term portfolio like stocks and like property, etc. And it makes sense to potentially time the market somewhat. But in general, if we don't want to overcomplicate things, just buying and holding it makes sense. Other long-term holders do it as well. And that then becomes a self-fulfilling prophecy. If everybody holds an asset, then of course the asset will appreciate over time. Very similar to what has happened with the property market as well. But that doesn't help us with timing the market, because here's the thing. Bitcoin is very volatile. It can crash 90% or 80% or 70%. And there is somewhat of a range. What we see here is a logarithmic regression, and while the tops might not align perfectly, because if you waited for the top to happen in 2021, you wouldn't have sold, but it is somewhat useful for figuring out where a potential bottom is. It's also somewhat useful to rebalance, as in if we are in the orange level, so that's the exact logarithmic regression, then we might just have our average allocation, let's say the 10%. If we are below the orange line, the closer we get to blue, we maybe want to be overexposed to Bitcoin, because that's when Bitcoin is very cheap. Maybe we want to have 20 or even 30% of our portfolio in BTC. And the closer we go to the red line, or the more we go above the orange line, the more we want to be under our target allocation. So maybe as we go up at the top, we only want to have 2 or 3% of allocation. And if we are halfway there, maybe only 5% or 4%. That way we continue to take profit as the market heats up and we continue to buy as we are going down. The lower end of that trading range right now is around $40,000. And I think there is a good chance that we're going to hit those levels again. No matter what metrics we look at, it seems like the long-term holders tend to make the right calls. They tend to buy cheap and they tend to sell expensive. And so simply just following what the long-term holders are doing is already in itself a winning strategy. The long-term holders tend to be more informed than the short-term tourists that just jump in when the media talks about Bitcoin. And so if we just want to be better than average, we should just follow the people that are informed better than average. Long-term holders also tend to have more money invested in Bitcoin. Now what we see here in blue is the long-term holder supply change. And the long-term holders tended to sell a lot of Bitcoin when it was at around $72,000, $73,000. This is also where I sold quite some of my Bitcoin. So I've shared this on this channel as well. I then, very similar to the long-term holders, bought back in at around 60K and then sold again at 100K. So what we see here with the reflection of the long-term holders is pretty much also what I did. Now I have not yet bought back into the market as some long-term holders have done. But when we also look at the past, when there were only a few long-term holders buying in, it wasn't necessarily the best time to always buy. It's the strong signals, the strong changes in the long-term holder supply that are really the signals. We don't have to buy early, we just wait for this indicator to make stronger signals. Right now, the long-term holders have actually stopped buying. By the way, what we see here in green is what the ETFs are doing. So most of the time, the ETF is acquiring. It did sell a little bit recently and it does have a net positive impact on Bitcoin, but still in the end it's the long-term holders that create the booms and the busts. When the long-term holders are selling, then that is a strong enough of a tailwind to stop a bull market. Now my impression is that most people have too binary of a thinking when talking about Bitcoin or any asset class, right? They're trying to predict where the price will be going, but nobody of course knows this. The only thing that we can do is we can add probabilities to something. So if something is historically cheap, then the probability of it recovering at some point is higher. If something is historically expensive, then the probability of this coming down at some point is higher. So we don't really know where things are going. We're simply just allocating towards an asset class based on where it is historically speaking. And so when I'm sharing charts like this, right, when I share the data, it's not in order to predict where the price is going. I don't know where the price is going either, but it does have an impact on what I'm doing with my capital. If things are expensive, I tend to allocate less. When things are cheap, I tend to allocate more. And the belief is simply that over the long term, we will revert to something like a mean. Now, one of those potential mean values is the realized price. So this is the average cost basis of the market. At one point, the market as a whole is in losses. That's when we want to buy. When we are in a bull market and we make new all-time highs, of course, everybody is in profit. And that's then also when we might want to take profit sometime. But again, there is some kind of mean value with this orange line. It's the anchor point of the market, right? Everybody looks at their portfolio and checks the value relative to what we bought an asset for. And the market as a whole does this. If we are currently in losses, if you bought Bitcoin and you're currently down, the likelihood of you selling is rather low, especially if you believe in the long-term trend and how Bitcoin has less inflation than fiat currency and how thus it's likely going to go up over the decades. When we are in profit though, we might consider taking some of that profit. And as profit is taken, we of course get closer again to the average cost basis. And that's the point. The question is, do we currently have very cheap Bitcoin prices? And while some models might say we are somewhat balanced, potentially even cheap, I think the downside does not warrant to be overexposed. I think it's better to have a reasonable allocation to Bitcoin, potentially even bet on falling prices. That's what I'm doing. Bitcoin could hit the $44,000 mark, potentially could go even lower, because historically at the end of a bear market, the price even went below the long-term holder average cost basis. So not just the cost basis of the entire market, but the cost basis of only the long-term holders. And that's of course lower because again, long-term holders are smarter. They tend to buy at lower prices. And that's currently at $27,000. There is a long way to go until we are at that level. Now, of course, the long-term average cost basis tends to also increase over time. And in a few weeks, in a few months, it might be at 30K, and then the drop doesn't look as severe. But still, most people, I believe, are underestimating the volatility of Bitcoin. Very few people thought when Bitcoin was at 67K that it could go down all the way to 16K. Most people don't have a realistic picture of how dangerous, quote unquote, Bitcoin is in the short term. In the long term, it's great. In the short term, it does have its volatility. Thus, that also opens up opportunity. And so when it comes to making money in crypto, I think it's very important not to look at the US dollar gains, because everything over the long term goes up in US dollars, especially Bitcoin. What I think is important is, does the trading actually make us additional return over just buying and holding Bitcoin? Buying and holding should really be the reference point, because why do anything actively if we don't get more return from it? And that's why I believe most other people are not honest with themselves. Most people just say, I made 10% that year and 50% that year. But if you're making 50% while Bitcoin made 100%, you're not really doing anything with your trading. You're actually burning money. Now, I want to show how volatile trading success actually is. This is my trading history in the last 40 something months, and every data point over here shows how much I have outperformed or underperformed Bitcoin in a given month. There are months where the underperformance is not pretty, but overall, over the time frame of 3.5 years or so, the average monthly alpha was 2.3%. So this dotted line over here is the 12-month moving average. So I really can't say how well we are doing over the course of 1 month or 3 months. Even over 12 months, you might be on average in the negatives. If you're still in the negatives after 2 years, you're probably doing something wrong. But it's all about trusting the process. It's all about learning more every single day, not just trading mindlessly, but figuring out where opportunities in the market are. If you then combine this together with a nice savings rate where we dollar cost average into that trading portfolio, then wealth grows rather quickly. My target is to double that portfolio in the next 2.5 years again. And so if you've been following this channel for a while, you know that I'm betting on falling prices since Bitcoin hit 100K, and so did the members of this community. So here are a few trades that have been shared by community members. So if you're betting on falling altcoins, because most altcoins underperform Bitcoin most of the time, there is still a lot of money to be made. Most people think most money is made during a bull run, and while that can be true because some winners make multiple X returns, it's still good to just constantly grow the portfolio as the rest of the market is going down, because then we are nicely set up at the bottom of the bear market to invest even more. I'm sharing all my trades in the premium membership, so the link is down below. It's thebitcoinstrader.com. There's also plenty of tutorial videos on how to manage risk properly, how to do on-chain analytics, etc. There's also a 1-week money back guarantee. So in case you don't like premium, just message me within the first 7 days and I'll refund you 100%. There's really zero risk for you. If it's the first time here, feel free to subscribe. I publish here regularly. A like would be very much appreciated as well. Helps the channel grow. See you next time on YouTube or see you in premium. Cheers.